Welcome to Hargreaves Lansdown's Meet the Manager. I'm Joseph Hill, and today I'm joined by Brian Hall, co-manager of the Blackrock Continental European Income Fund, which features on our wealth shortlist of funds selected for their performance potential. Brian, the Blackrock Continental European Income Fund invests in companies across Europe. So what are you looking for from companies and how are you investing in the fund at the moment?
Yeah, thank you, Joe. So we aim to construct a portfolio to provide an attractive, growing income stream to fund holders and also to provide resilience against potential volatility of the equity markets. It's a concentrated fund, so we'll hold 40 to 45 companies where we are confident of the quality and the quantum of the cash flow and those income streams. And we consider three key opportunity sets where we can balance the income with the quality and the growth opportunity sets. So the first one would be the premium yield. That's the largest bucket, typically half of the fund. High quality cash flows that will provide the highest dividend yields on offer to us. The second category, about 30% of the fund, is what we call the compounding income. So quality companies with recurring revenues, with confidence of those dividend streams growing over time. And lastly, the third bucket would be the unique opportunities where we see the dividend stream as underappreciated or where there is outsized growth opportunity in that dividend set.
And you referenced the fund's income focus there. Is Europe a good market for income, and how do you balance the need for income today but income growth tomorrow?
Well, we certainly see Europe as a great place for income. You think on average, European companies would distribute 40 to 45% of their earnings as dividends to shareholders, and that's been fairly consistent over time. And if you just look at how you've made money from the European markets over the last decade, of the total returns that you've achieved, about 40% of that has come directly from the income stream. So we do look at the individual companies as providing that yield, but it has to be a balance between providing that income today and the alternative uses of capital that the company has. So whether that's bolt-on acquisitions, organic cash, capex, or indeed returning the capital via share buybacks, which we see increasingly popular within Europe.
And the European market's seen something of a renaissance in recent months, but do you think that can continue given the geopolitical challenges that are dominating the news at the moment?
Yeah, you're right, we definitely had a strong start to the year. I think to a large extent we are seeing a correction from the situation of the fourth quarter of 24, where we did see outflows and we did see crowding into other markets, namely the US. So at the start of this year, we entered with a record valuation discount. So that's the first point. The second point is that you referenced the politics. I think this is a new regime that we are living through. And it is, you're bringing, new vigour to the European politicians to come together and build consensus to build a stronger Europe. It's not just about finding funds for defence budgets. It's about addressing some of the points regarding long-term European competitiveness, which was highlighted last year in the Draghi report. It's also about finding funds for greater infrastructure, as we're seeing in the news recently.
So where are you seeing opportunities in the market at the moment?
So we see quite a good breadth of opportunities. We have a large part of the fund invested across European financials, both in the banks and the insurance. We see sustainable and attractive levels of returns coming from the companies, and that's being distributed to the shareholders as well. Outside of financials, we see good opportunities across European industrials and the construction landscape. And there, those companies are either serving kind of long-term megatrends, whether that's electrification, decarbonisation, onshoring, and we do see a better environment for capex on a global perspective. And from a construction and a European domestic basis, we do see that the rate cuts which started last year will start to propel a recovery throughout the region as we go through this year.
What top investment tip have you picked up along the way through your career that might have been useful to know back when you started out?
I would say don't overcomplicate it. I think you should be able to distill an individual investment case to three key points. And if you're struggling to do that, then it's either too complicated or you may not understand it. And it's absolutely fine not to understand it. You can't get everything right. You may not understand all the companies in the marketplace. But if you aim to focus on what you can understand and minimise any potential mistakes, then you should be in a good place to build a track record of long-term outperformance.
And who would you say has had the biggest influence on your investment approach?
Well, I've had the fortune to work with many talented analysts and investors over the years. I would actually change the answer to say that it's been times in the market rather than individuals that have shaped me as an investor. So I started in '99, just when the dot-com bubble was about to burst. I spent my first few years as an analyst on the sell side, and then I moved to Blackrock just as the great financial crisis was about to unravel. So it's those periods of great volatility and wealth destruction that have really shaped me, given me a desire to manage risk through time, minimise drawdowns. But also critically, these tough periods don't last, and you need to be ready for when there are no more sellers left in the market, so you can take advantage of recovery situations.
And outside of work, how do you switch off?
Well, I have 3 children and a dog, so weekends tend to be pretty busy, whether it's standing by a sports match, taking my daughter to dance, or even taking my boys to go and watch rugby. That takes up a lot of times on the weekends, and I love those times. I love the countryside, especially when the weather improves, and I always make sure we have a holiday in the diary so that everyone gets time to unwind.
Brian, thank you very much for joining us.
Thank you. Good to see you.